Ladies and gentlemen, my name is Greg Michalowski. Today's date is September 19th, 2014. I'm going to talk about the Scotland Referendum. I'm going to talk about the trading levels that will be in play. First off, I'm going to talk a little bit about what we can expect now that the voting polls are closed. And the expectations, according to Eamon and Ryan from ForexLive.com, is that at 2 a.m. we're going to start getting some results from the constituencies in Scotland. It may not be, that's 2 a.m. local time, that would be 2100 hours New York time, or that would be 9 o'clock New York time. So coming up in just a few an hour or so, we should start getting results. Now, it won't be until perhaps 5 a.m. local time and midnight New York time that we start to get all the votes coming in, and between that time, that is another hour or so, and the 12 midnight New York time or 5 a.m. Local time is when we're going to get the official results. So that's what you can expect. Now let's get into what we can expect from a pricing standpoint. I'm going to focus here on the daily chart, and if you take a look at the daily chart, we are above the topside trend line here. This topside trend line for this pair comes in at the 164.20 level, and we are above that level, so we're making a bullish move to the upside here on expectations of a no vote. Okay, so let's talk about the no vote. Where do we go on a no vote? How much is priced in? I get that question all the time. It's priced in, or how much is priced in? I don't know how much is priced in. I don't know how many buyers are going to be out there or sellers are going to be out there off of the results. A lot of times, and oftentimes in hindsight, people say, oh, we bought the facts, or bought the rumor, sold the fact type of thing. No one really knows, no one really knows. So what you have to do is pay attention to the levels, pay attention to the technical levels, because that is what we do know, and that is what the market will be listening to as well. They'll fit the story to fit the price action. I can assure you of that. That's the only thing I can assure you. But what are the price levels that the market's going to be paying attention that you can see, that I can see? And so when we look at this daily chart of the sterling versus US dollar, we see the low here going back to the month of March 24th. That low came in at the 164.61, and the market price just in this new trading day went up to 164.577. So we got within 3 or 4 pips of that old low. That was our next target. We've been talking about that level as a target, and we've reached that target. So we need to, in order to continue this move to the upside, we need to get above 164.61, step number 1. Step number 2 is then to get above the 164.85 level. That's the 38.2% retracement of this move to the downside, coming at 164.85. As long as we can get and stay above the 61 level, and then get and stay above the 85.5 level, that would just keep us stepping up. So this is step number 1. This is step number 2 for the bullish case. Once we get above the 164.85 level, we're going to start to look toward this area right here. This area corresponds with these triple bottom right here, which came in at the 165.35 level. It's not really, they're not exactly the same, but as you can see, they're very close to each other. And then this low right here, which goes back to the month of April, and that level came in at the 165.50. So 165.35 to 50, that area, that red area, is going to be our third step to the upside. Get above the 61 level, step number 1, and stay above. Get above the 85 level, step number 2, and stay above that level. Get to and through this level, and that would complete step number 3. Now, if the market goes up above the 38.2% retracement, let's say, and goes up to the 165 level, becomes short of this 165.35 level, what do you do as a trader? Well, you want to see the price remain above the 85 level. If it goes back below, you have to start thinking about maybe the high is in place. Maybe that move to 165 and the move back below the 85 level is a warning sign to you that the momentum has died, that we've reached our peak, that the market can't go any further, that this last move was a failure of that move to the upside. And that's what you have to pay attention to as a trader as well. That's why we outline these steps. So understand the steps. 1, 2, 3. And then above 3, we're going to be looking for the 50% retracement at 166.20. What do I think the chances are getting up to 166.20? Not very large. Not very large in trading today. Maybe next week, maybe the week after, depending upon what the data is, what the we're going to be moving our focus after today to something else. But for today, I don't think that we have a chance of getting up to that level. Maybe there is, but I don't think there's a good chance. I would think that somewhere within here, 1, 2, 3, that is where we're gonna peak for the pound, and then we'll restart. Put everything back to 0. Scotland's done. Let's get back to restarting the whole thing. And I think I think that it's going to be on the bottom side. If we get up to 166 at some point, that will be a sell level for the pound, and we're going to be more 160, 166 type of thing between now and the end of the year. That's just my thoughts, okay? Now, on the downside, if it is a yes vote, if Scotland goes off on their own, congratulations, new country. Now, what are you going to do? I know what the market's going to do. It's going to plunge through the 38.2% retracement. That is of the move up from this low, the 2013 low, to the 2014 high. First step is get back below that 162.81 level. I think it's going to be like a hot knife through butter, to be honest with you. That it's going to go through that level, and then that's going to become our resistance level, our ceiling that we don't want to see the price move back above. If you get a chance to sell near that level on any sort of retracement, I think the market's going to love to be able to do that. Okay, then we start to move down through our lows here, and we could be down to the 160.50 level before you can say, Scotland's a nation, congratulations, good luck. So that level and the 160 level is going to be a key level on the downside. The 160 level is a 50% of the move up from the low going back to 2012 to the high going back up to 2014. 160 level, big round number, big level. Maybe it starts to stall at that level, but I think there's going to be total uncertainty as far as what goes on from this point forward. That it's going to just captivate everything and everything going on in the UK, and has a potential to slow things down from an economic standpoint, which takes the UK tightening perhaps out of the equation. Maybe not, but at least from the market standpoint or the fear standpoint, that would be the case. So again, if the steps to the upside are right here, 1, 2, 3, and then potentially 4, the steps to the downside would be get through the 38.2, use that as a ceiling, then start to look through these lows right here. And then once we get below those lows right here, which by the way, this is the 100-hour moving average, this is a 200-hour moving average, we start to look down toward our low levels that we had in trading this month, down to 160.50 level, and then the 160 level on the downside would be a level where really start to think about it. But it'll be faster to the downside than it is to the upside, I believe. That's what I'm thinking. That's what I hope. That's my roadmap for the vote. And want to see more, want to tell your friends about it, please go to our YouTube page and click on the subscribe button. Also for 24-hour coverage of the foreign exchange market 5 days a week, make sure you visit us daily at forexlive.com. Good fortune with your trading. Good fortune with your trading tonight through that vote. Bye-bye. My name is Greg Michalowski.